If you're still working at 65 and you think your employer health insurance means that you can just ignore Medicare, this mistake can cost you thousands and your HR team probably won't even mention it to you. My name is Brittany Garrison. I'm a licensed health and life insurance broker. I specialize in helping people just like you make smart, penalty-free decisions about Medicare and retirement. And in today's video, we're breaking down a mistake that I just see too often. Right? And it's almost always made by individuals who just simply didn't know that they needed to ask one very specific question. So let's get into it for today. Now, when it comes to retiring, you may be the individual that says, yes, I'm 65. I want to paint this picture for you, okay? You've worked for decades. You've got your employer coverage. It's really good stuff. It's been consistent for you and your family up until this point. But now you're turning 65 and you figure, I'm covered, so I'll just deal with Medicare later. And that often seems logical. I can 1,000% understand exactly why you think that, right? But here's what nobody is telling you. Delaying Medicare does have its costs, right? Delaying Medicare can cost you permanent late penalties. And when I say permanent, I mean for the rest of your life. Delaying Medicare can cost you unless you follow some very specific steps. And typically, HR departments don't know these steps. So if you are watching this and you are in HR, please help me help you. I want to help you guys be able to share this information properly with employees planning on retirement. But we'll get to that another day. But most people don't even know the steps exist, okay? Now, this Medicare mistake does not show up until years later when you finally go to enroll, and now you realize, wait, I have to pay what? I have to pay more now. Forever? Yes. Right? And so this is why today we're going to talk about a key term that most employers don't explain clearly, and that is creditable coverage. Creditable coverage. Now, Medicare is using this term all the time to simply determine if the coverage that you have with your employer, that employer plan, that good group coverage that you have is good enough to delay enrolling without any penalization, okay? Without any penalization. Here's the twist. It's not just about if I have coverage. It's about whether that coverage simply meets Medicare's rules, right? And those rules say a couple things. Write this down if you're taking notes again. Those rules say, if your employer has less than 20 employees, you are required to enroll in Medicare at 65, right? Medicare at that point will become your primary payer. And if you don't enroll and you just stay on your employer plan, Medicare considers you uninsured. And that's how people end up with a 10% lifetime penalty for each year that you delay Part B. Again, that's a 10% lifetime penalty, okay? So for every single year you delay, let's say you're 65, you turn to 65, you decide to retire at 69. That's 4 years. And it's 10% per year of a lifetime penalty for every year that it was delayed if your coverage was not deemed credible by Medicare. And a 1% per month, get that, 1% per month penalty for every single month that you delay your Part D. And yes, that's one forever. Okay? So this is not just a paperwork problem. I say all that to say that this is not just a paperwork problem. This is not just something that you can say, you know what, I'll figure it out later. I got good coverage. It works perfectly fine. I'm not retiring. And since I'm not retiring, this is something that doesn't necessarily apply to me right now. This is not just paperwork. This can become a money problem forever. And what you got to realize with that is that once you retire, you become an individual, typically most of my clients, right? That's when you get on a fixed income. Fixed income. Okay, so now you're talking about a money problem, not with earned income anymore, but on a fixed income. So this is something that is very important for you to notate if you're the individual that's planning to stay at your job. Now, let me share this story with you. And I got permission for this, of course. But I had a client who worked for a small business, which had 12 employees, and she stayed on that group coverage for a couple years after turning 65, just simply assuming that everything was fine, like most people do. The Human Resources Department had basically told her, since you're covered, just let us know when you plan on retiring, right? Just let us know when you plan on retiring. You're covered, you're good. And they meant well, but they just weren't aware of creditable coverage, okay? And so therefore, she didn't enroll in Part B, Part D at 65. She didn't submit the delay forms, and she didn't know that the plan wasn't creditable under Medicare based off of everything that I've told you up to this point. And so when she did finally decide to retire at 68, she got hit with penalties on both that Part B and that Part D that we talked about for every single month that she had delayed for Part D and every year that she had delayed with Part B. So now she has to pay those penalties every single month for a lifetime. Now, it was a $40 to $60 penalty for every month added to her Medicare costs, and that is simply due to a conversation that never happened. So now that you've made it this far into this video, I want you to ask your question. You're probably asking yourself this already, but so Brittany, what do I do instead, right? What do you do instead? If you are still working and you want to delay Medicare without getting penalized, here's the right way to do it, okay? First, you want to confirm that your employer plan is creditable. And if you don't remember what that means that you have more than 20 employees, okay? This is no guesswork, right? You want written proof. You want written proof that they told you this. Your employer should give you a credible coverage letter for both your Part B and your Part D. This is what's going to keep you out of harm's way. This is going to be the proof that you will need at all times for the time when you're ready to actually retire and get on Medicare. The second step is to keep that letter, okay? You'll need that when you go to enroll later because Medicare will ask you to prove it. Prove that you had coverage that met their standards, okay? And then when you retire, you want to file this form. It is the form CMS-L564, right? And I'll put that on the screen so you can see it. But form CMS-L564. This form is what's going to confirm that you had employer coverage and that you were eligible to delay your Medicare without a penalty. Okay, this form plus your credible coverage letter from your job is what protects you from that penalty. This is what protects you from that penalty. And without them, you are out of luck. There's nothing that anybody can do to avoid that, okay? And so this is what we want to educate you on so that you know exactly what to do, okay? Now, a lot of professionals, especially those who are in executive or consulting roles, ask me, well, Brittany, I'm still working and I make good money. Shouldn't I just wait so that I don't have to pay more for Medicare? But the deal is this. Yes, Medicare Part B premiums are income-based, but the penalties that you face for delaying them can often outweigh the cost of any type of saving that you think you're looking for. Plus, there are always ways to reduce Medicare premiums over time, but you can't undo a penalty, right? There are ways to reduce premiums, but you cannot undo any kind of penalty once it is applied to you as a Medicare beneficiary. So the bottom line is work with somebody who can model it out before you decide, okay? And what that simply means is the real takeaway I want you to get from this is that your HR team is really incredible. Shout out to them. They've been good to you over the course of these years that you've been an employee and been working there, but they can't be your Medicare advisor. They may not understand the rules. They may not give you, and because they don't understand the rules, it could simply just give you a false sense of security, and that's not their fault. It's just not their job, right? But it is mine. It is my job to make sure that people are educated and understand this. So if you're the individual who's still working at 65, you're planning to retire soon, or you're the person that's helping a parent figure this out, let's make sure that you're not walking into what we call a penalty trap, right? This is too important to leave by chance, okay? So because of that, that's what I'm here for. That's why I made this channel, and this is what I want to help you understand as we continue to grow in this space. So here's what to do right now. I want you to download my free Medicare guide. It's going to walk you through these decisions in simple everyday language to make sure that you take what we talked about today on this video and actually help it make sense to you, right? And then I want you to book your Medicare Clarity Call. This is a free consultation where we'll review review your employer coverage, we'll review your timeline, and then your best next step. And if you're watching this for your parents or your loved ones, forward this video to them, send this to them, because avoiding this mistake isn't hard, but fixing it is expensive. So I'm Brittany Garrison, and I'm here to help you start Medicare smartly. So thank you for watching, and I'll see you guys on the next video. Don't forget to subscribe, hit that notification bell so you know when we release another video. We'll see you soon.